9th, 2025. I don't even have an agenda. I know. Oh, there it is. I can read. Maybe. All right, we'll start with an invocation and pledge of allegiance by Audit Committee Member Severin.
Thank you.
Yeah.
Thank you. I'll say a prayer. Heavenly Father, we appreciate the opportunity to meet together tonight and so grateful for the opportunity to serve in the city and appreciate so much the citizens and their goodness and the efforts that they make to make North Ogden such a wonderful place to live and to be a part of. We pray that as decisions rendered tonight that they would be made with the citizens in mind and concern for their finances. We're again grateful for the opportunity to serve and pray for those within our city boundaries and others who might stand in need of assistance and guidance and direction and strength from thee for them. And we give thanks and pray for this in the name of Jesus Christ. Amen. Amen. You'll repeat after me.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
All right, thank you. Do we have committee member Schaefer online, or is he excused tonight?
I believe he's excused. He couldn't make it tonight.
Okay, well then we'd like to excuse him. All right, next item on our agenda are public comments. You let me know if anyone's online.
We do have a
Oh, yeah.
The minutes be approved as they were.
Okay, sorry. Yep, we'll go back. Discussion or action on the minutes. September 12th. We have a motion by committee member Randy. Do we have a second?
A second.
Okay, second by committee member Severing. Any more discussion on the minutes from September 12th? All right, all those in favor, please say aye. Aye. Okay, thank you. I know. Any unopposed? Okay. Sorry. I always think that item 1 is the Pledge of Allegiance. That's why I just skip it. I'll do better. All right, now we'll go to public comments.
We do have citizen Chris Pulver online. If he raised his hands, he could comment.
Okay. He didn't raise his hand fast enough, so we'll move on from public comments. All right, item number 3, discussion on the 2023-2024 fiscal year audit. And Jamie Jones, the finance director, will lead their discussion.
Thank you.
Yep.
Do we have Ron available yet?
Not yet.
Not yet. Okay. Well, I guess we'll start with. We'll start here. Let me know when he comes on, so that we don't take up too much of his time.
Well, there's one finding.
I know. I just want to say thanks, Dan, for all your hard work on helping us get through this. It was rough audit year for me internally, but other than that, we got through it. There was a lot of projects, a lot of construction in progress, I should say, that probably held it back a little bit, for why we're so late, but we did get through that. And then, I don't know, I guess we'll just kind of begin. If we want to look at page 9, start with fund balances. Part of the MD&A is we talk about fund balances and where if there was an increase or a decrease to the general fund balances. And it looks like this year we did decrease about 3.8 or 2.8 million. As far as fund balances go, or 17%, and that is largely due to the public safety building. So I know it looks like it's a big number, a big decrease. Usually it's an increase, but we did decrease because of that building. But all in all, we ended up the year pretty strong. We dropped from 31% where we were last year. We dropped down to 28% as a whole for the general fund balance unassigned. I don't know if there's anything else to discuss on this page. Okay. And then, if we want to go to page 13, statement of activities. This page, describes the city's net position as a whole. The top portion talks about our functions and our programs, within the government, and also look towards the right of the page. It also talks about, I'm sorry, below it also talks about the business type activity, which is our water funds. The top portion talks about our expenses and then the charges for services that the city collects. And yes, as far as total government activities, the city does not collect enough charges for services to cover all the expenses. So towards the bottom where it talks about general revenue there in the middle of the page, this is where like the property taxes, sales tax, and those kind of funds come in, which helps supplement all the governmental activities.
In other words, we're not collecting enough for our
collecting
services to pay for it by itself, huh? Yeah.
Basically is what that is,
Yeah.
what it's saying. And so, yes, we do rely on those other general revenues. In the middle of the page where it says business type activities for the water, sewer, stormwater fund. I think that we're doing a pretty good job there, but there's always gonna be improvements as far as those funds. I don't know that if we ever collect enough of that.
Pretty close.
That's the goal.
That's if I'm calculating, that's $185,000, right? The difference between the two? Between expenses and charges?
I'm sorry, where are you looking at?
I'm still on page 13 under business type activities. So I was just curious if that 2,999,000 and then 2,814. So that's the difference.
So that's
between-
the difference, yeah. The expenses is the 2.9, and then the charges for services are the 2.8,
So that's leaves us with a $185,000 deficit.
right? But we did have, particularly for the water fund, we did have those grants, and so that's why, that one stays positive. So. So our net position changes. I forgot what that number is. Oh, no. See. Am I looking at it wrong? Let me then,
What's that?
what the net change was, the actual net change. Am I looking at it wrong?
Right, this changing that position?
Oh, there it is. Yeah, gosh, there it is, right there. Changing that position. I was like, it's not different. Yeah, so it's the 8.9 million, 5 million in the general government activities, and then the 3.9 million in business. So we want that number to be positive, and it is. So. I think we have. I think that's really all to go through, as far as like the report itself. Is Ron on that?
No, just barely.
Oh. Well, good, because I was gonna get to the compliance.
Okay, I'm gonna promote him to a panelist so he can show up in person. Or maybe just allow him to talk. Okay. So we should be able to put her on when he's ready.
Hello, can you guys hear me?
Yes.
Oh, thank heavens. I swear, technology scares the life out of me. It works all the time until you want it to, and then it doesn't. Well, thanks for letting me be here tonight. Take just a couple minutes to talk to you about the financial statements of your city. What I'll do is just take a couple minutes and go through what we do as auditors, the conclusions that we come to, and how we came to those conclusions. And then we can talk about anything else that you'd like to. So really quickly, we have really 4 areas that we look at in your city. One is to make sure that the financial statements are materially correct. 2 is to make sure that your internal controls have been designed, implemented, and are effectively working. 3 is to make sure you're in compliance with state law based on the areas that we look at this year. And 4th is to make sure you're in compliance with the Uniform Guidance or the Single Audit Act. If you reach that threshold, which you did this year. So what we do to make sure the financial statements are materially correct, we take a look at the books of the city, and we perform a number of tests on those. We look at them to make sure the balances are correct, that it actually balances, and then we start to perform tests on those. We'll send out confirmation is the first thing that we do. So we send out confirmations for cash, property taxes, sales tax, use tax, Class C roads, URS pension, and any debt obligations that you have. We'll send out those confirmations to those entities to make sure that their balances match our balances, and we agree. During the audit, we'll also review a number of invoices. So we look at the invoices for, at the beginning of the audit, we'll pull a sample of a random sample of invoices and look at those to make sure that invoice check matches the check, and the check is issued in the proper period and it hits the GL on the right count. Gives a good sense of the controls that are going on in the city as well. We also pull invoices for capital assets, accrued liabilities, various other accounts as we go through those balances. And then we'll also, at the end of we'll pull a sample of invoices that are after the end of the year. We want to make sure that those balances are, if so an expense happened in June, we want to make sure that the expense is recorded there, even though it may not have been paid until the next fiscal year. So look at those and make sure those are accurate and proper. There's a number of calculations on the financial statements. And so we go through, and part of our testing is to recalculate those balances to make sure that they meet accounting standards and are accurate. We do that through with accrued payroll, depreciation expense, compensated absence, and pension liabilities. Then we also do a lot of analytical review. So we'll take the trial balance and we'll compare it this year to last year. We'll create some expectations of what we think those changes should look like. And if anything exceeds those, then we start asking questions to try and find out where those differences came from, and then performing tests to make sure we can verify those. We do that at the beginning of the audit. Then as we're testing the balances, we do that a second time. And then we do it a third time as the financial statements are written, just so we can understand high level what's happened. So we revisit those beginning balances a few times, or that beginning analytical review a few times throughout our audit to make sure that we're covered and we can understand what happened. So that's a really quick review of what we do as auditors to come to conclusions that the financial statements are materially correct. So our report says, in our report, or in our opinion, the financial statements referred to above present fairly in all material respects, respective financial position of the governmental activities, business type activities, each major fund, and the aggregate remaining fund information of the city as of June 30th, 2024, and the respective changes in financial position and cash flows were applicable thereof for the year then ended in accordance with accounting principles generally accepted in the United States of America. That is considered an unmodified opinion, a clean opinion, or the best opinion you can receive. So simply what that means is through all of our testing, reviews, procedures, our opinion is that the financial statements are materially correct and you can rely upon those numbers. Second thing that we do is to look at internal controls. We want to make sure those controls are, like I said earlier, designed, implemented, and working. We do that through looking at your policies and procedures, interviews, walkthroughs, and questionnaires. So we don't give an opinion on internal controls. We do evaluate those as we go through our audit, and particularly at the beginning. So we will look at cash receipts, cash disbursements, payroll. We'll pull a sample of those and walk an invoice from the beginning all the way to the financial statements and make sure those controls that are in place are actually effective. If we were to come to the opinion that a portion of the city didn't have controls, or those controls had been designed at one time but are not effectively working anymore, we would bring that to your attention, especially here in writing as well. Through our testing, through our walkthroughs and interviews, we feel like the controls are implemented, working, and are effective. So there's no issues that we need to bring to your attention as far as internal controls go. The third thing we look at is state compliance. So the state auditor gives us certain procedures that we're supposed to perform on an annual, every 3-year, and every 5-year basis. And so as we go through that process, we'll hit each one of those areas. They kind of, which procedures we pick, there's certain procedures for us to follow. So in this current fiscal year, we looked at budgetary compliance, fund balance, fraud risk assessment, justice court, restricted taxes, government fees, cash management, open and public meeting, and retirement systems. So those were the areas that we were looking at in this year. We went through those procedures, and there was one issue or finding that we had, and that's related to the budget. It looks like we exceeded our Aquatic Center Special Revenue Fund at expenditures that exceeded the budget amount. So our recommendation to you is just to make sure that as we're going through the budget process and throughout the year that we're managing that budget, and if we need to amend the budget to increase those budget limits for the spending. Other than that, there were no other findings in the areas that we looked at. The last thing that we do is if your city receives and you spend $750,000 or more of federal dollars, then you're subject to what is called a single audit, or under the uniform guidance principles, which basically means that we take those dollars that were spent and we look at the programs they came from, the different departments of the federal government that they came from. Each one of those departments has different compliance for how you spend those funds. And we look through those and determine if you're in compliance with those compliance areas that they've prescribed. So really quickly, it looks like this year we looked at the ARPA funds. And so that was the area that we focused on. So we performed the tests that are required by those agencies to determine that compliance, and we feel that you are in compliance with the Single Audit Act and the Uniform Guidance. So there are no findings or question costs that we have to address to you at this point. We feel like you've spent those funds in the way that they've determined they should be spent. So that is a really quick review of what we do as auditors and our conclusions. And I'd be happy to answer any questions anybody has about it.
All right. Are there any questions for Ron? Like there are no questions.
Well, that's easy. If I can just give a shout out to Jamie and their staff. They do a great job. An audit's pretty in depth. We throw a lot of stuff at them. We ask for a lot of documentations, and it's pretty intense. So we appreciate them. They do a great job of providing the information to us, and we appreciate their work. So thank you.
Thank you.
Thank you, Ron.
All right, so is there any other discussion on our audit?
I just have a question. Explain what he was talking about the aquatic center.
We didn't collect enough.
Well, we had, for the year ended, there was a $94,000 shortfall. But the exception he was talking about is, the expenditures have to be budgeted and approved by the council. But there were a lot of fast moving things down the aquatic center, chemicals, stuff, etc. And we didn't amend the budget to cover for that $65,000 of additional expenditures over what was initially budgeted.
Didn't we do some refurbishment too? It seemed like you guys were talking about budgeting
That's
for
this
this year. That was okay, not
Yeah,
last
use some of the RDA funds. I do have a couple things I think would be good to point out. That's okay, Mr. Chairman. I'd reference you to page 19. Of the report, that is the statement of revenue expenses and change in net position for the proprietary funds. And if you look at the net operating income, which is basically our operating income versus our expenses, and you see below that we get grant revenue, we get interest income. We don't classify those as reoccurring. And you can see that every proprietary fund, other than the sewer fund, we had a loss. If that was business financial statement, you would say that every fund other than sewer, now a good portion of that is depreciation, but frankly, depreciation has a purpose, right? Because we need to have that money when things are replaced. So I would just point out, we've made the adjustments to try to rectify that shortfall. And as Jamie would point out, that the depreciation and amortization, particularly in the water fund, will really accelerate somewhat this next year because of the new water tank. We were lucky that we had ARPA funds, which were referenced in the single audit report there. That would have been quite interesting. Don't know if they'll have that kind of program again in the future, but obviously we need to look at that depreciation line for future needs in those departments. But just wanted to point out that those have been adjusted charges to try to bring those in line. Solid waste will be, I think this year, John, we're negotiating a new contract with Republic. Is that correct? Next year.
I think it's next year. I think the rep thinks it's this year and we think it's next year.
Okay,
So-
well, we'll get that figured out. The other thing I would point out there, we have benefited from interest income, $517,000 of interest income on money in those funds. That's over on the total enterprise fund column. Interest, I think that's income, isn't it? Yeah, interest income, $517,000. I don't think we can count on that, Mr. Treasurer, can we, forever?
I would so.
Okay. Just a few things to be aware.
Do we have anything more for Ron? We can let him go.
Don't you do, I
We
know
have
Chairman
to go.
does.
Nope.
Okay,
Why would
thank you for being here. Have a good night.
All right, thanks, Ron.
Thank you.
Thank you. What was your, wait, did you have a comment?
Can I ask a question? Yep. So why would we not have, why do we have such a large interest income right now, but not have in the future? Because there's a lot of it going out.
I think we had the ARPA money still as that we were building the tank, plus rates were, 5%.
They're over 5% for most of the year.
And that's, as we know, it's working its way down. And obviously we have numerous projects that we need to complete. We'll use up some of the money that's currently earning interest. The next one I think we ought to look at is page 45. This would show that it shows our budgeted final amount. And the actual we received revenues over what we expected of 610,000 basically, or what I think we budgeted for. And our expenditures were 260,000 less than we budgeted. And you can see where the differences, come from.
I noticed that we increased the budget during the year. And it looks like we didn't need to because we ended up with $260,000 more than we needed. The budget, the actual came out less than the original budget.
Right, and I would agree with that. But like our audit finding for the aquatic center is because we came in 10% over budget on the next page on 47. So this 260,000 really is 97.5% of the budget. So we're within 2.5%. And I would hate for us to go over budget and have more findings. That would cause some problems, I think, with the state auditor. So 260 sounds a lot, but when we look at each category, each line item, I mean, we're talking, our departments are coming within 95, 99% of the budget, some of them right on it.
What happens if a department goes over their budget?
If we do it too often, and of course, depending on how much, so like you see one on here for the, general government buildings, we went over by $2,500.
Yeah.
I think that was like 1.5%. There is obviously that leeway, but the state auditors will step in and they could fine us. I mean, I don't know if.
Even if
anything.
the overall budget is not out of line, huh?
Yeah, depending on how severe,
Mhm.
depending on the line items or, in general. And so that, like I said, that's 97.5%. I think that's really, really pretty darn good for all the department heads and managing their departments. So.
It's particularly good considering the original budget. It's very close to the original budget,
Yeah.
closer than about $100,000.
Jamie, I would assume if you look at the revenues under taxes, that was primarily sales tax was the major contributor there over what we budgeted. I think we're up like 5% more than we'd anticipated.
Right, yeah.
Because property tax generally is like right on the dot.
And also the utility franchise fees. They were a little bit higher than the budget as well, so.
With the $70,000 of in the police department, was that primarily in salaries because we weren't fully staffed in salaries and benefits, or that seems to be the biggest variance? I mean, percentage wise, it's not that great, but dollar wise, you recall?
So, yeah, there was, we had we had a lot of retirement last year. And just making sure that number is right, but really, you're right, it is the salary and benefit lines, it makes up that 70,000. And I would have John speak to, I don't know how understaffed we were pretty much the whole year, but.
I mean, it's probably safe to say the average was about 3/4 of an officer down, which might account for in that $70,000 range.
Yeah.
Yeah, it's been tough for us to keep fully staffed. And
Although I think we are the highest staffed in the county as far as a percentage.
right now we
Wow.
got 2 officers,
Yeah.
which.
We're down 2 officers.
Yeah, we've got 20 sworn officers versus anticipated 22. Okay.
So can I ask a question? So does that $70,000 mean that we hadn't prepared for the individuals who were going to retire?
Well, that means we're better than what we
Yeah.
budgeted.
We did better, okay.
Yeah, that means we're better than we
Right,
budgeted.
okay.
And then I think this reference page 50. which is our capital projects fund. This is the money that, we have to have committed and spent, basically over a 5-year period of time, at least committed. At the end of the year, we had $4.697 million, but we hadn't fully dispersed all the money on the building, had we, Jamie, at the end, so the balance is a little bit less than that. And, if you look at the transportation utility fund, I just remind those who are members of the council, we still have to address that issue. So we should put that on our list of to-dos for the council. And I do want to compliment Jamie and her team. They've been on the other side of the fence. You don't know how much work goes into this, getting this all put together. I appreciate the auditors, coming in and giving us our report on a timely basis. So,
Thank you. Any other discussion on our audit?
just so you know, I did spend about, I punished John and Jamie for about 2 hours going through, it was this, but I won't bore you with all that.
I appreciate that we have a mayor that's enough of an accountant that,
Yeah, understand this.
yeah.
I don't want to say I understand governmental accounting, don't get me wrong, but I try to.
More than a layperson, so.
I try to.
So if you're going through the year, I have a little QuickBooks account that I keep in the, so if you're going through the year and everything is entered properly, there's really no work to do at the end of the year. So the work you have to do are things that need cleaning up during the year that didn't get put in right or didn't.
Right.
So that's what causes the, yeah, that's what I find on my QuickBooks. The same thing.
I mean, that sounds simple, Randy, but basically you have to take all that information and put it in a generally accepted accounting form with footnotes and management discussion and analysis. So yeah, the information is there. You just have to extract it and get it in the right place because, you know, our quarterly statements aren't GAAP prepared, so to speak.
Right.
But, you know, they're not off materially, but you can see all the format and the footnotes and
Yeah.
all those things in there. Mr. Chair, can I just make
Yep,
one other
go ahead.
comment in the footnote? I think we should all remember, it's the long-term debt footnote, which is footnote number 4, page 32, I believe. And this is a reminder, this is the sales tax revenue bond, basically is the majority of this. And I would just reference here these interest rates at the top of the page. On the 6,750,000 series 2021 sales tax revenue bond. Our interest rate is 0.5% to 2.8%. With the 2.8% being much later in the tranches of the bond. And the smaller one of 2,750,000 has rates varying from 2.3 to 2.4 to 4.65. So every year it's a 20-year bond. Every year there's a payment. I call it a tranche. And obviously the shorter term tranches have lower rates. So the maximum rate that would pan out on that first bond is 2.8%. On the other is 4.65, and I've asked our treasurer on an annual basis to report to the council what interest rate tranche we're in and what our return is on the PTIF or investment, so that we can see, you know, right now we're earning in the PTIF around 5%.
A little less.
Yes.
And we're probably paying 0.8% or 0.9% right now on the major portion of the money. So we're making money that we've got invested versus putting down the bonds. But pretty attractive rates still, and, what are we on our third principal payment now, or fourth? It is November,
This will be
right?
3, interest, the big ones in May. Yeah.
So it'll be our third principal payment. on
So
that
is the
one.
safety building all paid off now between the loans and what we put in
When
our
you say paid
cap?
off or paid for?
Paid for, yeah. We're not paid off because we have this, but it's settled at this point, yeah.
In fact, I think the warranty period is coming up next month, so.
Yeah, we've started meeting, and walking through the building and identifying warranty issues.
The one you want will be up, but yeah, we've dispersed all the funds that, we needed in building the building.
Do we have any significant warranty issues?
No, it's small things.
Okay.
Good example is 2 doors just don't quite line up anymore. They're double doors, so they pop open. Things like that.
All right, any other discussion on the audit? All right, we'll move on. Discussion, item number 4.
Ben?
Thank you.
Thanks much help.
Thank you, Ben.
Okay. Item number 4 is discussion on quarterly financials, and the presenter will be Jamie Jones, again, our finance director.
How much time I got?
-6 minutes.
Oh, negative, what? We're down.
It's a good quarter.
So we're just looking at the first quarter, even though we're clearing to January. We're looking at the first quarter, which is July through September. So our goal is to be at that 25% mark. We are under in the general fund. A lot of that will change with the second quarter because we get most of the general fund dollars, which is property taxes, in December. The Aquatic Center, because of their season, is in this first quarter, and so they spend quite a bit there in the beginning of the fiscal year, and then again towards the end of the year. The water fund looks great. Revenues are at 29%, and that, again, like what the mayor's talking about with interest. That includes there, and then the 35% for expenses is the water tank. The water tank is completed. I believe they completed it at the end of October for the most part. There might be some other like landscaping things or whatnot.
I didn't realize they were gonna bury it again.
Yeah.
It's better for the water quality for it to be underground.
Is it?
Mhm.
Well, and you also have the support, I guess, of the earth around the walls, yeah.
Yeah.
And you get that much water and weight in it.
Not much going on in the sewer fund as far as, anything exciting. The stormwater fund, 33% of revenues is because we got some grant revenues, thanks to Casey, our emergency manager / treasurer. Casey, I'll let you talk about it.
About
About the
the
grant,
the
right.
recoup. So we were able to, due to the flooding in spring of 2023, we had to spend a significant amount of money for on some repairs. We were able to recoup all of that money that we spent. That went out was something in the neighborhood of like $380,000, I believe. Somewhere in that neighborhood, and we were able to get all that back from the state through their disaster relief program through the Department of Emergency Management. So we were able to be reimbursed for all those invoices and get that money back.
Yeah. So for the stormwater fund, that meant it was about 76,000. And then we did a stormwater project to go along with the water tank. The stormwater line there in 2019. And then our solid waste fund looks pretty on target.
Speaking of the water tank, how is that financed? Did we pay for it, or do we have another loan on that?
We had the ARPA money the mayor mentioned earlier that paid for a significant portion, but the rest was the fund balance with
We
essentially
paid it out
cash.
of our reserves, yeah.
Mhm.
Mhm.
Well, that's a major good asset for the city, isn't it, to fix us up for a long time, I think, the county.
I don't know if we want to go in deeper into the general fund revenues, or if you want to just jump to sales tax or interest. No, we're good.
You're the one that's, you're presenting.
All right, so this is the general fund revenues by department, and just call out some of the, well, I don't know, they're kind of all over the board, aren't they? Again, general tax, that'll change in December when we get property taxes. Licenses and permits, we're doing really good. Per se, with building permits, I think we're right now, we're at 34%.
When you speak of December, you're speaking of December we just
Did I say
passed?
December?
Yeah,
Yes,
Oh,
yeah,
yeah, for the
sorry, for
tax.
property, for property
so
taxes,
you
yeah.
have gotten it already, then.
Yeah, we would have gotten it. Yeah, that's why I say this is first quarter.
First
through-
quarter, yeah,
Through
right,
September. But I was busy with the audit and we're still
Yeah,
balancing December, so. Intergovernmental revenue, most of that is the state B and C road funds, and that comes 6 times a year. So that one's why that one's so low. Charges for services. I believe this one is recreation. We start out with a bang with football fees. So they come in pretty high there in the fall. Fines and forfeitures, we're doing great. Miscellaneous revenues. That one, we set a low bar for miscellaneous revenues. It's not something we want to rely on. It's a lot of the police reports and copies, people go and requesting those from the police department, those types of revenues. And so it looks like it's, a big number, but we only budget like $3,000 and I think we have 5. So, that kind of a thing.
Jamie, is, interest income in miscellaneous revenues?
The next one is
Oh.
interest earnings. Yeah,
Oh,
so that
sorry.
one. So that one, we have quite a bit of interest earnings. And I'll defer to you in just a second. And then we don't have anything major for grants and transfers coming in yet in the first quarter, so. Do you want him to speak of interest earnings now, or?
Sure.
Okay.
So,
Because the mayor brought it up.
with our investments, this year we were with meter investments, we earned, this is, calendar year 24, the numbers for calendar year 24. That's how I did this report. Our first year earnings were $129,000 and $129,614 and 58 cents. And so that is a return of 3% on our $5 million that we have invested in meter.
Did we have that invested the whole year though? I didn't think we did. I thought we started like February, January.
For September.
Yeah, we started in December of 2023.
So
So
that'd only be 7 months worth of interest, right? We started in December of 23, and went through June of 24.
so that's the calendar year
only
24.
through September.
So the numbers I got, I wrote down because I didn't realize I should have done it by quarter. That's my mistake. So that was calendar year 24, so January through December.
And we had the full 5 million invested during that time,
Yeah,
because that's that's basically less than we had 5 million, we earned 129,000.
correct.
That doesn't, I sent you back a note on that.
Yeah,
We need to look into that because that was not the intent to have such a low return on that.
Yeah,
I mean, why would we?
PKIF.
Because we were looking at investing in longer term
Right?
right.
bonds and stuff, so when interest rates started falling. But we need to talk to our advisor if that's really the case, that we only earn, 3%.
Yeah, I'll double check with our advisor, with me
Yeah.
on that.
We need to double check, because if that's the case, we probably don't want to continue a program of that nature.
Right. And the PTIF, we earned interest of $1,228,191.89. That's January through December. So that's a return of 6% on our money there in the PTIF, so quite a bit more.
Yeah, that's where we're talking now.
Yeah, which is I kind of remember the rate being at 6%,
No,
so I don't know how we would earn 6%. So we need to look at those numbers. Yeah. But overall, it's a lot of interest income, wherever it come from.
Yeah.
Nice to be on the collecting end of that, yeah.
all right. General fund expenditures, look at some of the outliers here that, council department. I'm just kidding there.
Council.
They're high rollers, I agree.
No, that was high just because we had to pay for a subscription, out the door there the first quarter for, to be part of the
League.
league, yes, thank you, the ULCT is what I wanted to say, yeah. And so that ate up quite a bit of their budget. I believe the same thing for the recorder. I want to say that was a lot of the, website, stuff and, yeah. Non-departmental, the liability insurance, it hits us hard there at the beginning of the year. The community, the CSOs and the, oh my gosh, animal control. This one was interesting. It actually has to do with salary and benefits. And I believe it's just because there's been so much overtime. Something I wanted to dig in deeper, but I haven't yet. And then parks is just their season is right there at the beginning of the first quarter. I will talk about the finance department being at 7%. That's, our expenses are gonna hit right now because the audit's finished. So we'll have more coming in at the second quarter. And then general government buildings, I will not complain about this. That one's such a hard one. That one's for all of our utilities, for all of our buildings land. So I'm a little bit nervous of why that's low. I'm hoping that there's not something missing, but it's encouraging. So this is just a quick look at where we've been for the last 4 years for the first quarter, in the general fund.
That's a good question.
Yeah.
How much does it cost to put on the Barker Park Christmas event? Those decorating all that and everything. That sure is well attended. I'm thinking it's probably worth it, whatever it is, but I'm wondering, it looks like it does take quite a bit of
So
funds.
we have a sponsor who participates.
Oh, do you? Oh,
But so usually cost to the city is less than 10,000.
oh, wow.
And some years it's been like 3 or 4.
Wow, that's definitely worth it. Yeah.
So
Yeah, a lot of citizens enjoy that during the Christmas time.
So this is just, like I said, looking at the last 4 years, just real quick in the general fund is a little higher in 21, 22. And that was because that's when we got ARPA dollars before we decided CARES money before we decided we were going to move it for the water tank. So that one's why that one jumped up. Aquatic center, again, that 21, 22 year was COVID. And then leveled out, and then everything else seems to be right on track there for the quarter. And then next one, sorry. And then the next one, same thing with expenditures. Aquatic center seems high, but that's just their season. The water fund, the red column, which is this year, again, that's the water tank, and then same thing for the stormwater fund. So this is our sales tax, and I did update this since the slides went out. We didn't have October, but we do now. And we are about 6% over the projected budget, not quite $100,000. It is leveling out. Anybody have a crystal ball?
Do you have, as you say, do you project for November?
Yeah, I
we gonna
hope it's
spike?
higher than that other purple line right there. The purple line is last year's. The blue line is the 3-year average. So yeah, it'll be interesting with November, and all those sales starting earlier and earlier. Last year, Black Friday was in November, this year Black Friday was in December. But it almost seems like with all the sales and everything that was going on around Christmas time, it didn't matter. Because they just seem to be going on earlier and earlier, so I don't know, your guess is good than mine.
Well, it reflects the well-being of our populace, I guess.
Yeah, yeah. And then this is just more on sales tax. We're at 93 million for the state of Utah there on that top graph. And then, the city right below it there, it seems like they're staying in town. I like to see that, and then the city percentage by month, the bottom one there, hopefully that'll stay or maybe grow, more than 30%. And what that means is we're collecting 30%. Our cut is the 30%, right? Of total sales tax that the state generates. So. And then I don't know if you have any items for the next meeting or any other discussion.
Any discussion on these quarterly financials? If not, no discussion.
Thank you.
All right, thank you. All right, we'll move on to public comments.
Let me get there, sorry.
You're all right.
We do have a raised hand
All right,
from Citizen Pulver.
all right, Citizen Pulver.
There's somebody that doesn't sound like this.
Yeah.
Oh, that's the library people.
Oh. But Councilmember Pulver, we can't hear you. The microphone isn't moving on his thing at all, so I can't. For whatever reason, it's not picking him up. Let me try removing permission and giving him permission again.
Make sure to keep going in case we have that.
Oh, we'll make sure.
Might have just got a text from him. His microphone isn't working.
We like to call you on the phone and you can hear us. Or call me or you can put him on speaker.
Councilman Pulver, if you want to call me, we can put you on speaker on my phone and then we can go from there.
Mayor, to clarify on that rate for the PTIF, it was 5.2%, not 6%.
Yeah, that sounds
Okay.
close.
I just typed.
I like this
Okay.
percent better though.
If that's your worst mistake, we're good.
Okay, we do have Councilman Pulver on my phone.
Yeah, sorry. I don't know what the heck's going on with my microphone, but it's just the good old net.
We
pension
need you to
liability
say your
that's
name and
going
whether
on.
you're a resident.
My name is Chris Pulver. I'm a resident of North Ogden. How's that? Is that better?
That works, thank you.
Sorry. So yeah, the net pension liability that keeps going up and nobody really says what our true liability is, even though it's enlisted in the long-term debt for North Ogden. So, I mean, I was trying, and that's maybe a question that we can't answer. I know talking with other people that do city audits, they just pull the URS data, shove it in the audit report and call it good. And no one's been able to explain it to me. So, I mean, when you have a net pension asset of 0, but yet a net pension liability of 1.4 yada yada $1 million, that's always something that, where does it come from? Anyway, more of an ethereal question, but every year I want to ask him.
I can give you some insight. Jamie is gonna talk to the auditors about that. But the basic thing is if they terminated the pension plan at the state of Utah today and paid out the benefits to all those who deserve it, we would owe the state $1.3 million or 4. And you can see it's a substantial jump. I asked Jamie to talk to the auditors and find out the components that caused that increase.
So the response I got was what Krista said, sorry. What Krista said that we get the report, like Ron, our actual auditor, does go in and look at the URS information because they're audited as well. And then he reviews that audit and asks his own questions. But what they both said, what both Ron and Ben said, is that we should have URS come out and do a presentation. They will come out and talk to us about it. They're not able to speak on their behalf.
Well, the two things that usually affect that are interest rates, because they assume there's gonna be certain earnings on the assets in the plan. So as rates go down, our obligation goes up, and the other would be salaries and participants in the plan, but that's a substantial jump if you look at it from last year, so it's a good idea, maybe get them out here.
Yeah, especially to me, it's more of a, a company has to have, if I equate it to the company, I know it's the government, so it's weird. But if you equate it to the company, you have to have some sort of asset behind it backing it up, or it's insolvent. So I guess that was, the 401k is different, obviously, and that's, a contribution that we make. But the pension part of it is something that is black magic, and it always has been, even when I tried to research it. So anyway, that was it. Thank you.
Plan asset, Chris, would be as if we were overfunded.
Yeah,
So that's why it's zeros, because we're underfunded in the plan.
gotcha.
It's complicated. But that's just kind of the simple explanation. Sorry.
Okay. Anyone else online?
No, it shrunk it again. No, unless someone jumped in the last 2 seconds. No.
Susan.
Okay. Item number 6, committee members, staff comments. Jamie, do you have anything?
Thank you.
Thank you. Thanks for your work. Casey?
Nope.
Oh. Okay, Randy?
Appreciation. Yeah.
Just echo the mayor and Ron and everyone saying how good Jamie and her group of 3, I'd really say 4, because Jamie does 2 jobs. So her group of 4.
Right.
Yeah, I'd like to set the next audit committee meeting if we could, it'll be in April, correct? So does everybody think April 10th would work?
April 10th.
6 p.m. right here in this room.
Can we push it a week?
I don't see why not.
The 17th or the 24th?
We'd probably do the 24th. The 17th is the ULCT conference. We'll probably have council down there.
That would be the 24th then.
On Wednesday, April 8th,
It's April 16th, 17th, and 18th, I believe.
Right, I have it scheduled. Thank you.
So this is a Thursday, right?
Correct.
April 23rd, 4th.
And you said CT is that week before.
The week, the 16th through 18th.
Okay. Where's that? Is that in St. George campus?
Yeah, St. George.
All right. Mayor, do you have anything you'd like?
I would just say that, when you look at these statements and digest them, it's not totally obvious here, but I'm really proud of the council that they're trying to look ahead. And with John and Jamie to say, okay, what's the future and how are we preparing for that? Just my personal impression, historically, it's been, let's let the next guys worry about it. Then all of a sudden we find ourselves having to make dramatic adjustments to things. So, if you really digest this, you'll see that we are generating adequate funds to cover what we anticipate, and with a little bit of cushion. Cause we don't know, there's unknown things, but, I think you'd see that reflected in the financial statements, so I think that's a good thing that, you know, we're looking ahead, try to see what we're facing and what we know we're faced with, so. That's all I got.
All right. Committee member Blake.
Just great job,
Yep.
Jamie and Casey.
Thank you. I did have a lot, but Ryan already put her computer away, so I guess I don't.
Hey, good conducting the meeting. Committee member Barker,
Thank
Chairman Barker, good job. I think you did well at that.
Yeah. All right, we're looking for a motion to adjourn.
So moved.
Motion by the mayor,